So there are things which are better on an online or a digital platform, like dashboarding, transaction processing, compliance, risk. Whereas there are certain parts which are just human, right? And emotional management. And as you go up the wealth curve, I think the humans will play an increasingly larger role. You can never replace that human touch and that human connect.
Welcome, friends. Welcome to Network FP Success Talks, where you meet, get inspired, and gain insights from the leaders of personal finance profession. I'm your host, Sadiq Nilgund, and with us, we have our special guest for the day, Mr. Atul Singhal. Welcome, Atul.
Hi, good morning to you, Sadiq. Thank you for having me on the show.
All right. Atul is the founder and CEO of Scripbox, India's #1 digital wealth manager. He co-founded Scripbox along with Sanjiv Singhal in the year 2012. So, friends, Scripbox, is currently serving over 75,000 investors across 2,800 pin codes with a team of over 200 people and managing 15,000 crores of assets. And Atul is a IIT Madras and IIM Bangalore alumnus. So pleasure to have you with us, Atul. Welcome to the show once again.
Thank you very much, Sadiq.
So, friends, Atul, in the first place, I want to ask you, you have a typical way of measuring the success that is 2,800 pin codes. Everybody says about cities, towns, and all these things, but what made you get into this measuring your success with the pin codes? Just understand that, and then we move on to the first question.
Yeah, we just wanted to serve the power of digital, right? The ability to serve customers in multiple geographies, multiple locations. We felt PIN code was a better measure. I mean, actually, if you technically look at, there is nothing called a city. If you go to the postal system to figure out the boundaries of a city, postcodes are a better way of measuring how many people or how many locations you're able to serve. We could always said Kashmir to Kanyakumari and Bhuj to Asansol. But we felt PIN codes was a good way to figure out from which areas are our customers coming to us.
Lovely. So that's a very widespread 2,800 PIN codes. Most of us end up serving not more than, let's say, 5 to 10 PIN codes just around our cities. So, Atul, to start with, can you tell us how the idea of Scriptbox was born in the year 2012 after you came back from abroad? And can you share some key milestones that you've covered in the last 11, 12 years?
Right, lovely. So as I said, so I'll repeat myself, apologies for that. So I think there's confluence of 3 or 4 things. One was my own experience with digital, having built a digital bank in South Africa. I came back in 2008 to actually set up an asset management company for Old Mutual. We'd applied for a SEBI license. We were setting up a wealth platform for IFAs, actually. And that's a similar model to Fidelity and iFast, which came into India, and Scandia, which is a global platform, which we've had. So then the second was around then 2012 when Betterment, we unfortunately didn't take that live because of the Lehman crisis. So I became an entrepreneur and I was doing a couple of other things. In 2012, Betterment Wealthfront had just got funded. And we felt, hey, there was an opportunity to do something similar in India where you could build a digital business strongly here. That was a second. Then actually there's a very interesting anecdote, and I call it, and this is a made up name, so pardon me. This is what I call my Javed Bhai story. So my father, God bless his soul, was a lieutenant general in the army, and this in 2009. We had just sort of wrapped up the Old Mutual idea, and I was sitting at home in Dehradun and talking to my father over a cup of tea. And my mother and my father, who obviously was a housewife, they're having an argument, right? My father is telling my mother that 1 lakh rupee which has come from the DSOP, I'll give it to Javed Bhai. And my mother is saying, no, you don't know anything. We'll give it to Mr. Sharma, who'll give me 2,000 rupees back. And this is an argument in Hindi, and I'm like listening for quite some time. And I said, hey guys, I hope I'm not disturbing you, but do you know that I know this industry a little bit? I was setting up an AMC. I'm from the industry. Why are you giving this money to Javed Bhai? And my father's answer was, he was a nice guy, right? I said, but what is he going to invest in? Why is he investing for you? What is your idea? And you realize that the knowledge asymmetry and the knowledge gap was so large that there was a large opportunity. So the idea behind Scriptbox was to actually bring good wealth management to the common retail investor. So while people would say more than 50 lakhs, 1 crore, 2 crore, had some advice, but the common retail investor just didn't have any advice. And our idea was that we could do this at scale using Scriptbox. So that was the idea. How do we bring good wealth management to the retail customer in a scalable manner? And that's what we've stuck true to. Some milestones, I mean, when we first went live, our rationale was somebody who's investing 10,000, 20,000 rupees a month. Nobody really is there to serve him in a systematic manner. How do you really get there? And we said, okay, if you want to save for the long term, you have to be in equity. If you have to be in equity, you have to be in equity mutual funds. It's no use, and I still believe that, no use going to direct equity. If you have to be in equity mutual funds, how do you decide? At that point in time, there were 850 equity schemes. Believe me, in 2012, 2013, right? That time, all these classifications had not come. And all of them, when we unwrapped the kimono, there were 243 stocks underlying those 850 schemes. We said, this just makes no sense, right? I mean, how does a customer choose? There's a mint top 50. How do you want to put 20,000 rupees into something or 10,000 rupees? So we actually went live with only 4 funds on our platform, equity funds. And everybody, I'm sure, laughed at us. And a lot of people on the other side, ye log bachcho ke liye game hai. So we said, no, but if you're investing, and we were always fit for purpose, right? We were very target market focused. And we said, okay, four funds, then 4 types of money. You want to shave for the short term. We had ultra short and short term. We had short term money. Then our customers wanted tax. We added tax. So our milestones were going live with only 4 funds and standing up against this. Our next milestone was getting our 10,000th customer. Our next milestone was having 4 types of money. Our next milestone, which was the big one, was obviously crossing 1,000 crores in 2019. And then God has been very kind. We're about 15,000 crores. So yeah, being counted in the top, as somebody, I mean, today, I think Cafe Mutual wrote an article. We are the #1 boutique MFD. I mean, these are all vanity metrics, but I think the biggest milestone for us has been the emails we get from our customers, which say, we started with you, I'm now a crorepati, right? We got one yesterday, and that just makes your hair stands up. It makes you feel really, really happy that we have more than 10,000 millionaires on our platform. So, and for us, 10 lakhs is a millionaire. And that gives us immense satisfaction.
10,000 millionaires on the platform. Congratulations. Very good.
Thank you very much. Thank you.
10,000 people with more than 10 lakh rupees investing and managing through your platform. Fantastic, Atul. And I must say, going live with just 4 mutual funds was a very bold move. And including me, many of us started speaking about Scriptbox because of that. You're trying to simplify wealth management. So just down to just 4 scripts, And I must say that really made the industry took notice of Scriptbox. Atul, you claim Scriptbox to be the #1 digital wealth manager. I want to understand, one, what makes you, take this claim? Obviously, we want to understand the numbers behind this positioning of yourself. And second, how do you think digital wealth manager is different from a traditional wealth manager, which many of us watching this session right now would be?
So first, #1 is the customer love, right? Our NPS is north of 50. For us, the size and scale is incidental. It's 75,000 customers, I believe, who love us, which makes us proudly say we are #1. We are a revenue-generating business compared to some of our other other online players. I respect them. They've got different business model. So we confidently say that in terms of size, scale, customer love, number of customers, we are #1. I think there's a fundamental, compared to traditional wealth managers and digital wealth managers, at the fundamental level, we're solving the same problem. Can we give good advice for the long term to our customers? So I think there is absolutely no difference in our intent, in our value, in our purpose, especially your audience. I mean, very clearly, you guys have created an ecosystem of great professionals working together. The delta for a digital, and digital is a way of life, right? So this is a bad example. It's Amazon versus Big Bazaar Online. I mean, the Big Bazaar Online has put an online channel on top of a grocery, and Amazon is a way of life. So for us, everything is digital. How we create algorithms, how we do asset allocation, how do we put funds into our portfolio, how do we tax optimize when we are withdrawing, how do we serve 75,000 customers on an increasingly lower cost to serve. So digital is actually not the online part. That's the simple part. It's about imagining advice at scale, which a digital part does, and which I think the reason we are able to be who we are in 2,800 pin code, 75,000 customers, versus typically 200, 500 customers in a boutique, because ultimately that's a difference. But the intent is exactly the same. And I think that alignment of values is what really makes us who we are. So we are a wealth manager with a digital DNA.
Advise at scale. I love that, that particular word. And imagining that, how do I serve so many people at one go using the digital tools. Atul, you have over a period of last 11, 12 years now raised over $50 million. And in terms of rupees, that would be around 360 crores. That's crazy money for many of us who are listening to you, right? One, we would like to, I'm sure, we want to see ki itna paisa lekar karte kya hai, but I'll not get into that. But what I want to understand is, in raising this 360 crores, you must have pitched to so many investors. These investors and venture capitalists, how are they really looking at digital, the wealth management industry in general of India? And what is their view and their perception of how the wealth management industry is growing and going forward in India?
So I think there is absolute belief that the whole category of wealth management is secular growth for years to come, right? It's underpenetrated, it's underserved at 15 to 17% of GDP compared to 60% global averages. Mutual funds are still very underpenetrated. At 20% CAGR or 18 to 20% CAGR, it's a high growth industry. Large, the whole democratization of the mass affluent is a large opportunity. So there's a clear belief that this is an industry which is perennial. Secondly, it's a very unique business. It's an annuity into perpetuity, right? Once you acquire a customer and you're able to retain them, we have got 95% customer retention rates, which I think is amongst the industry leading average, the industry, including offline players. We're able to retain our customers. So this annuity into perpetuity, if you're able to acquire a customer and able to compound their money with you over time, because we are acquiring customers who are actually accumulating wealth. Unlike a lot of professionals who actually target customers who are more retired and larger corpuses of wealth, we are still more targeting the corporate salaried people who are still accumulating wealth, right? So that's the second part which the venture capitalists or the fund managers like about the industry and about us. Then about scale, right? Anybody who believes that, our stated mission and vision is to provide financial freedom to 1 million families. And financial freedom for me is not about how much wealth you have, but can I sleep easy at night? Right? Can I put my pillow and say, my children will go to college, I will retire safely, I will have a home which I can live in. I think those are the answers we're trying to solve for, like all of us on the call, and we just do it at scale. So I think from a VC's perspective, this is an industry which is high growth, which is perennial. It's about figuring out a scalable, low cost model which will allow you to do this for a large number of customers. And that's what has attracted the capital to us. Obviously, we love our venture capitalists. It allows us to do what we like to do.
Sure.
Digital acquisition is expensive, right? Let's just remember that acquiring customers is expensive. And that's where a lot of the capital goes in. Building technology at scale is expensive. And I'll come to a couple of anecdotes as we go along in the call.
And any specific numbers you can give where wealth management industry or the mutual fund industry is at this level right now, and it is expected to go to this level in the next 5 years, 10 years. I'm sure you have those data more than many of us would have.
So we're at about 40 lakh crores and about 22 lakh crores on the retail side. Our expectation is that this number will probably hit will be 5x in about 12 to 15 years from now. And that's our estimate, because see, there is a tipping point in GDPs when the disposable income crosses a certain amount, you put a lot more into wealth creation. And we think that's happening now or in the next 2 years. And that will actually attract a lot more. So if you combine financialization of assets, people moving away from gold, real estate into the capital markets, this whole I think craziness around demat accounts, people punting, stock trading will mature. They will realize that for wealth creation, you need to come to somebody like us or to people on the call. And that combined with the increasing growth of wealth in India, I think, I would be surprised if the good players are not growing at 30% for many years to come.
So 5x in the next 10 years is what is your expectation?
I'm betting on that. Definitely.
Sure. Now, there is a lot of debate around technology versus humans in our field. I want to understand from your perspective, what do you think is best left to technology in digital wealth management? And what do you think is best left to humans in wealth management? And also, in case you have views around artificial intelligence, now it's the talk of the town. You might want to add that and bring in that element, Atul.
I'll start with that, right? So I think in our view, AI is applied intelligence, not artificial intelligence. It's applied intelligence. How do you, I mean, I've been an analyst for now 20 years, right? We were doing scorecarding, we were doing regression analysis, so we always use math and science to create our portfolios. Now, do you call it AI? Do you call it math? Do you call it technology? And for technology is only as good as a user. Right. So we have got 70 engineers working for us, but they're human beings, right? For you to create great products, you have to have empathy. You have to understand. So it's a combination of human intelligence, customer empathy, using technology. Now, whether technology is data, whether it is science, whether it is math, whether it is mobile applications, is all just solutions for the customer. And in terms of what is better, I think it's very customer centric. There are customers, it's like I always say about credit cards. There are customers who will pay 100% of their card bill every month. There are some automatic. There are some customers who will check every line item. There are some customers who will write a check out. It's all very, very customer centric. I don't think there's a better answer. It's for customers who desire a certain solution. There are customers who want to shake hands with you, want to meet you in person. There are customers who don't want to talk to you. Don't call me, I'll call you. And we've got all of these customers. I mean, the reason we were able to scale our model was we realized that you have to design your solution around the customer need. You can automate, you can make things simpler and faster for certain things, right? Like dashboarding, right? So now you really don't need to send a PDF. Customer can always look at so there are things which are better on an online or a digital platform, like dashboarding, transaction processing, just compliance, risk. Whereas there are certain parts which are just human, right? And emotional management, right? If customer says the markets are too hot, I mean, this is a daily decision you have to take, right? Should I invest? Should I withdraw? Right? The market is at all-time peak, 20,000, it's crossed. Half the customer is saying, Atul, what will happen next, right? You're saying, I don't know. Let's take a 5-year view. But that conversation has to be had. So to be honest, brutally honest, there is no one size fits all. It's very, very customer centric. And as you go up the wealth curve, I think the humans will play an increasingly larger role. You can never replace that human touch and that human connect, because each individual is an individual. You can personalize the portfolio construction. You can individualize by digital technologies, but the actual transmission, I believe, for some time to come, will need to be human.
Got it. Sure. Atul, you at Scripbox also became a talk of the town within our industry when you started acquiring major practices, right? And many of the well-known practitioners merged their practice with Scripbox. I know personally so many of them, right from Sujata Kapraji, Bharat Patak, Sachin Jain, the Mitras, Varun, and so what really went behind this thinking where you acquired the well-established practices? We want to understand that, someday we also want to get acquired by somebody bigger than us and want to get paid off well, right? So what was the thinking behind this and how is it currently panning out for Scripbox?
So I think the word acquisition probably is misrepresentative of what we have done. Actually, we just partnered with people more intelligent than us. We found first people who had the right values and ethics. We found people who were aligned to us. Like Bharat always says, it's about the chemistry. The physics and the math is much later, right? And I think it's that alignment of wanting to do the right thing for customers which brought us all together, right? So Sachin and Shobhit were trying to build a platform on their own. Anirudh was doing something in Gurgaon. Sujata had built a great practice. We said, how do we scale all of this together, right? How do we bring great people together onto a single platform to scale? So it's always been a partnership model, right? So our people are called managing partners. They're out in the regions doing more of what they can do with a larger set of customers. That's always been the intent of all of us coming together. It so happens that we obviously wanted to build a single brand so that there's continuity for the customer, the succession planning for the customer, because ultimately the customer should see greater value or an upgrade of their car over a long time, right? So what we say is the customer getting better research? Is the customer getting a broader set of products? Is the customer getting a better platform? Is the customer getting more face time with the people they want to see? So if you can tick all of these boxes by coming together, that's the whole idea behind what Scripbox has done. Yes, technically, commercially, there might be a construct which we have done, but all of us are in this together. I mean, Sujata, I'm sure if you know well, still gives me as much grief every day as everything. And Bharat is still a mentor and guide to me to keep building a greater business. No, jokes about Sujata. She's such a great partner. She teaches us on a daily basis. So we learn together every day. We build together, and we continue to believe that this partnership is panning out very, very well. All of us have been able to grow. All of us have been able to serve our customers better. I will not take individual numbers, how they've grown. But one thing I really, really obsess about is customer retention, right? And that I'm confidently able to say that our retention rates are as good as the industry, if not better.
Sure. And I must say about Sujata, since it came about in your she was part of our advisory board, and the best ideas to network FPS, some of the best ideas to network FPS come out from her, and I'm sure these minds which you have put together are helping Scriptbox get on to the next level and bring in an element of human touch along with your digital strength that you have already had in place.
Absolutely. I mean, the power is actually we say it's new age wealth management with old wisdom. It's that combining the best of both worlds, which is what will give customers great outcomes, and we're committed to that cause.
Absolutely. Add on to this question, Atul, many of our practitioners now, mutual fund distributors, registered investment advisors, they are in their 50s and 60s, okay? And we all start thinking, what next? I've grown my practice so much of hard work has got in, so much of my sweat has gone into building this kind of a practice, and people want to be acquisition ready so that someday some bigger player, if I don't have the next generation to take over, I want some bigger player to come and take over my practice. So what are some of the tips that you would have? Not Scriptbox, there would be many other people who might be, maybe Scriptbox, maybe other people who might be wanting to acquire such kind of practices. What would be your tips to such practitioners to become acquisition or partner ready? When
difficult one. I think this is better answered by somebody like a Bharat or a Sujata or a AKN. I think the most important part is alignment around values and ethics. So find a partner who wants to do what you want to do. Somebody who's not a product seller, who's not doing this for valuation reasons, but for value reasons. So we've never done this to say that we'll get a higher valuation. We have clearly said that so one of the triggers for doing this was for us to learn how to serve these customers, right? Because our customers accumulate wealth over time, they compound 500% over a 5-year period, but you also want to serve higher ticket customers, understand their needs. So I think this coming together was a driver. So from an existing practitioner's perspective, there is never a right time. At some point in time, I think opportunity will come knocking, and you need to be lucky and you need to be ready. As I said, values and ethics, having a clean book where you sold wealth management rather than product, very clearly good bookkeeping, right? Especially financial bookkeeping. I know everybody keeps their books clean, but segregating personal costs versus business costs. So some of those things just help the speed of the transaction, right? You're able to move faster if that is ready. Sure. Simplicity matters, and if you've got a very complex portfolio of some stock, some mutual funds, we find it very difficult to understand. I say I have a very small brain, so things I can understand, I can absorb. So as long as it's simple, we can do work together.
Lovely. Okay, sure. Some good tips there. Cleanliness and simplicity and bookkeeping. Many of us take this as granted. Why is this important? But those are things which build trust in a person who is buying out or acquiring the practice. Now the next question, Atul, I want you to be brutally honest and not to be politically correct here, is about and it's not really about Scriptbox. There's IndMoney, there is Grow, there are many other digital platforms which are coming about and who are trying to serve the digital savvy self-serviced or a do-it-yourself kind of customers, right? So how do you think these kind of digital wealth managers are competing with the traditional players, and how do you see this panning out in the marketplace? That is, digital wealth managers versus the traditional human touch wealth managers.
So let's split this slightly differently, Sadek. So you think about traditional wealth management and online or digital wealth management. right? Then you think about wealth management versus transaction processing, right? Now, if you think about most of the online players, with due respect, and they're doing a phenomenal job of expanding the market and deepening the market, and actually providing transaction platforms, right? So whether it is, and they're actually enabling you to buy and sell mutual funds, and they're not actually helping you create a portfolio, right? So where the traditional wealth managers who are on the call will win is because they have customer interest in their mind and create long-term portfolios. Who are the other product sellers in the offline world? And with due respect to banks, most banks today, I mean, apart from a certain income category, are product sellers, right? Your relationship manager will call you on the 28th and say, sir, you got so much money left. Please buy an insurance policy. Please do a fixed deposit. Please move money to liquid. So whatever is happening. But, and also if you go to a bank website and try to create a portfolio, you still have to buy single mutual funds. So when we win and when the IFAs win, it's the banks which are likely to lose, right? They have a distinct advantage at this point in time that they have access to the transaction account and the money. But once that gets democratized, an account aggregator comes in and that money becomes, well, that information becomes in the public domain, I think that advantage goes away. So I don't see the IFAs on this call as competition, because it's very difficult for a digital player to replace that relationship. We can partner with them, but it's very difficult to replace that. Over time, yes, customers will look for different solutions. We will win from either customers who are coming new into the industry, they've done some transacting, they've burned their fingers in stock trading, they've burned their fingers and say, hey, now I've become serious. And our number is that once you've created wealth of about 1 times your annual salary, you become serious about money, right? At about 35, 32, 33, 35. And then you're going to say, hey, boss, I can't do this on my own. I need somebody who can handhold me. So I don't know if India is a DIY market. To your question, India is a DIFM market, do it for me market. So even today, people will buy furniture from IKEA and call a carpenter home. They will call IKEA and they'll call Urban Clap at the same time, right? Urban Company. So I think what we try to do at Scriptbox is do this handholding on the digital platform. Where required, we offer an offline service. Exactly what the traditional players are doing. So I think our businesses are, and I talked about 20-30% CAGR in such a large growing pie. I think our businesses are secure. We just need to use different aspects of automation technology, which suits us and helps our business grow. So I really don't see traditional wealth managers as competition to us. Yes, I mean, it's very difficult for them to cost effectively serve a 10 lakh rupee or a 20 lakh rupee portfolio. Those will naturally gravitate to us, right? But in the 50 lakh to 2 crores to 10 crore, I think we are all in the same game. We just have to look after our customers and be there available for them. It's the banks, I think, which will send customers our way.
So it's we both versus banks, which you're creating. All right.
Absolutely. 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 Absolutely convinced of that.
Atul, my next question is about your investors and clients, right? I imagine that they are typically a tech-savvy Bangalorean sitting out of his computer saying, okay, let me, along with my job, let me manage my money on my own in a self-service way. What do you think are the typical needs and behavior of this digitally savvy self-serviced investors, as we call it? Or the other way to put it is also do it yourself, but to put it in a little nicer way, you know, it's self-service investors, right?
I think it's a very big difference. Self-serve and DIY is different, right? So the example we give is that there are, if you go back to a classroom, there are front row people, there are back row people, and there are people in the middle rows, right? In a class. The front row are the do-it-yourself people who know better than you, who will always challenge you. I can beat your returns. I can do all of this. Who will try to horse race you. Not very good for us. Last row, they're not going to do anything, right? They're happy blowing. It's the middle row, boring customers who are looking for simple, good advice. Are customers who come to us and come to people on the, your partners or the people on the network. Yeah. How are they different? They're not very different. They have children who want to go to college. They have simple ambitions. So at a psychographic and a demographic level, we are very similar. We are solving the same problem. Peace of mind with your wealth. I have done well in my career. I have been successful. How do I manage my money in such a manner that I have enough and I can keep upgrading my lifestyle on an ongoing basis? So I don't think there is any need difference. It's a question of what do they feel more comfortable with? Do they feel comfortable actually managing their wealth on a platform where they have 24/7 access, they have visualization, or do they still want to, like even today, there are digital customers who have signed up who will say, Atul, I hope you looked at my portfolio. right? Or they will call Bharat and say, "Aapne dekh liya kya?" Right?
Sure.
So that will continue. That will not go away. Right? So that assurance that there has been oversight is really important. But in terms of, I don't think the typical description you've had, a lot of our customers are silver surfers, as we call them, people 55 plus, but completely technically on the platform. Right?
Oh.
It's like, how many people go to a theater now, right? Netflix is the answer. My father, I mean, God bless his soul, moved reluctantly to online banking, but now you can't send him to a branch. There are people who now use Paytm all the way or UPI and who are reluctant to do it. So I think once you've gone down a certain path, the convenience, the ease, the accessibility, all of that makes you use it and trial it much more. And we all have to go down the path. So I think it's not that my customers are a technical geek working in a startup or in Bangalore. As I said, I'm in 2800 Pincodes. Yeah. So I don't think we've got customers who are all there. I think the smartphone has been the biggest innovation which has helped us. So for me, the most expensive real estate is this, right? I have to do everything with you on this little device.
Right. My next question to you is about you as an entrepreneur, you and Sanjiv both, right? But since you're here, entrepreneurship looks very rosy, to put it in a little more ruder way. It's really about the in thing these days, right? You being an entrepreneur. But just wanted to understand, you have raised so much of money, $50 million, whatever. There's a lot of stress also. I wanted to understand from your perspective, what are your deepest fears and anxieties of being an entrepreneur? And how do you, as an individual, overcome these fears and anxieties?
I think deepest fears and anxieties are at different levels, right? One is obviously at a very personal level, which is about health, right? Your health, the family's health. And I think whether you're an entrepreneur or not, which will concern you. And I think all of us just getting healthier, really. And I know it's more philosophical in statement, but that's something which really, obviously, as you get older, children get older, that becomes a bigger concern. As an entrepreneur level, I think there are two concerns. One is how much our money you raise. It's about making sure we build a sustainable business. So we've always been revenue focused. We've always had regular funds as part of our business strategy. It's been longer, more painful to build the business the way we have. But yeah, will you at some point in time run out of money, right? Because whatever you do, the industry is what it is, right? There's pressure on TER, there is pressure on commissions. So the third is about reputational risk. We are in the trust business ultimately. Something dramatically going wrong, right? Because we do serve 75,000 customers. So we live and die by our yesterday's activities, right? You might have built a great business. Tomorrow morning, there's a headline which you don't want to see it's equally harmful for you. So the deepest fear is something which harms our reputation. We do everything in our power to make sure nothing happens there. So yeah, financial stability, growth, reputational risk, health are which keeps us concerned, if anything at all. Yeah, how do I think lack of hair makes you more stoic. I read a lot. I try to remain healthy, go for a walk, do crosswords as much as possible. So I try to avoid taking work home very clearly. So I have a rule that 6 o'clock, my laptop is switched off. And unless there's something dramatic, I'll really typically not try to get involved. Obviously, customers' interests matter, but you try to avoid. You segregate work life and personal life. We insist on a work-life balance. Actually, in Scripbox, if your work-life balance is bad, you get pinged on your grades. So you're not rewarded or awarded for working longer hours. We find it's a bad practice. So some of these little things keep us who we are.
Thanks, Atul, for being so transparent about, it's very difficult to speak these things out in the public, but you have been really very transparent about your fears and anxieties. So Atul, are you up for a fun rapid fire to end this talk today?
Absolutely, yeah. Go for it.
Right. Okay, so we have 5 questions, and although you have a choice to give it a pass, I would request you to take them, whichever ways you can. That will be really very nice. So first question: you are a IIT IIM alumnus. What did IIT and IIM did not teach you about the world of business?
2 things. One is cash is king, and theory and practice are very, very different, right? I learned sales on the ground. I come from, I'll give you an anecdote quickly, right? I remember I joined Madras Coats as my first job. I was selling thread. And Madras Coats training is you actually become a sales guy on the ground, selling to a retailer. Now, sitting in a small village called Mangrol, and anybody who knows Junagadh, Jamnagar, it is in that area. And I was standing at a dukan and a galla of one of these guys. And he says, he turns around and tells me in my face, sir, why is your thread so expensive? And I was trying to tell him quality, this, that. He said, no, sir, because idiots like you with such high salaries work there. That's why you're more expensive than anybody else. So nobody can teach you that, right? That humility, that, only as good as the work you do happens on the ground.
All right. You have worked abroad. After you came back to India, what is one thing that you hate about India? And also what's one thing that you love about India, comparing India to abroad?
What I love about India is just the energy and the enterprise, right? The whole energy in the ecosystem as an entrepreneur, the employees I walk around, and I think I've seen this. India is an enterprising country, right? We believe in the future. We have excitement. As somebody said, I was telling some kids who want to go to UK to study. I said, they are history, we are the future. That's the difference. They're living on their legacy. We are building our legacy. So that's the difference. The future belongs to us, and that excites me about India. One thing I don't like about India is I think there is a little bit of a, I would say, chalta hai attitude. Which I believe in God, right? Ki ho jayega, chalta hai. That we live in hope, but that's good. But the fact that you have to get it done sometimes is a gap, right? So there is this sort of.
This helps you to sleep in peace at night. Apart from that, it doesn't help. All right. Atul, you are a fitness freak. How do you rate wealth and health on a scale of 1 to 10 as important in your life? And it cannot be same. Something has to be above 1.
No, so health is definitely on a scale of 1 to 10, more like 7 or 8. Financial well-being is important because it will lead to mental health issues. So I think having enough, and enough is a state of mind for me, right? I mean, people with 50 lakhs are happy, people with 1 crore are happy, people with 10 crores are unhappy, right? So I think wealth is important. I mean, you need to look after your family. It is our responsibility that we look after our families, we work hard, we do good for the nation, and we do good for the society. So money and wealth are important, but only to a certain extent. It's about your health, and which is, I at least rate much higher than and I mean mental health as much as physical health. Is really important.
So what is one financial goal you're yet to achieve apart from retirement? One really the biggest financial goal which Atul is yet to achieve?
I think charity. So I think I would like to have a lot more available to me to do more philanthropy. I today don't have that comfort. There are a lot of causes I'm passionate about, but I just can't participate to the level I'd love to. And I am hoping that as we are able to build more wealth for our million customers and we're able to build wealth for ourselves, we're able to do more, both physically and financially, for the less privileged.
Sure. That was lovely, Atul. And one last one. What do you think your team really likes you most for? And what do you think your team really hates you most for?
I hope I'm right. And I think they like me for not interfering. So I mean, there are two styles of leadership. Right. There is one which is you are like, I come from an army background, right? My father was a lieutenant general, my brother was serving lieutenant general. So who stand in front and say, okay, follow me. And the other is like a shepherd. So I have a more shepherd style. I stand in the background and say, okay, let's keep moving ahead. So I think they like, I hope the fact that I'm largely hands off and let people be. What they probably don't like is I'm always changing the goalpost. I'm always pushing harder. I mean, we were 1,100 crores in March 2020, and I set a goal of 10,000 crores, and people thought I was smoking a pipe, right? I said, no, boss, we'll hit 10,000 crores. And that was supposed to be March 25, we have 15,000 crores, right? Yeah. And I think just that raw ambition sometimes probably upsets people. Ki, yaar, ye kuch bhi karo aur mangta hai. So, so that probably...
That's part of an entrepreneur's DNA, right? It needs to be that way.
Yeah, never rest. Onwards and upwards every day.
Lovely, Atul. I love the energy, your ambition, and your vision for helping the masses. It was wonderful having you on our show. and wish you, Scripbox, Sanjiv, and the entire, all the practitioners who have joined you, right from Sujata, Bharat, Shobit, AK, and everybody, all the very best for the mission which you have taken on. Friends, I have opened the chat. Hands on the keyboard. And if you can share one key takeaway or learning or feedback for Atul and Scriptbox that you have gained in the last 30 minutes. On the chat, everybody. And in the meanwhile, Atul, any last and final words that you have for the Network FP community? How do you like this community? You have seen some of our events and you have interacted with some of us. What is your opinion about the Network FP community in general?
I think more power to you. I mean, I got to know you over the last 1 year. I obviously didn't know much about you. Obviously, through people like Anup and Varun and Sujata and I think you're doing phenomenal yeoman service to the nation. I think the more people do good work for customers and their wealth, I think the whole fact that we are interested in customers' long-term wealth creation, our interests are aligned to customers. It sounds like psychophancy. It all sounds very simple, but the number of people, one of the reasons the regulator is doing what it is doing is because there's so much mis-selling. And I think the fact that you are nipping at the bud, you're nipping it at the idea is so powerful. So more power to you. Anything we at Scriptbox can do to partner with you, it'll be our entire pleasure. We'd love to work with. We think this community should grow.
Thank you so much, Atul. Some of the feedbacks coming for you. Reputational risk is a game changer in digital world. Chemistry first, then physics and maths, memorable quick. Being clear about alignment of philosophy and values is the most important. Great energy and attitude, great session, inspirational, great achievement, very inspirational. All this love and respect for you and Scriptbox, Atul. All the very best. Thanks a lot for joining us here on the show today.
Thank you very much. It's been a pleasure. Thank you very much, Sadik. Take care, really. Thank you.
Thank you so much.
Thank you, everyone, for all your kind comments. I really appreciate the love. Thank you. Thank you.